Everybody, welcome to Stockradar. Stocks on the move for another week. Today's date is the 8th of December 2022. My name is Richard Lee and I'm managing Stockradar.com.au website for you. Don't forget to check our Trading Centre out for an update on all our ASX 200 stocks today. I just provide an overview of a few stocks so you get an idea of what I do. Last week we looked at our win-loss trading profile and how the profits and losses stack up with regard to that profile. An interesting outcome was revealed. In our efforts to always understand our trading results and can keep clipping costs and extending profits, today we'll look at one of the big drags both psychologically and on our trading results, and that is the big loss and how we can and must avoid that, because we often carry them, don't you know? The repercussions are enormous in both time and money. So we'll look at that aspect today and how it can easily be fixed in trading tactics. We also looked last week at some beaten down stocks, which reveal some pretty interesting opportunities. And what opportunities they offer us all this week. And this focus goes back onto miners, and with respect to such corners of the market such as rare earths and lithium, and with realistic expectations that despite such bullish outlooks, they will still suffer large price swings, and we look at just where the opportunities are in that sector now and where and when the big upswings will occur. So, you know, we've got the rare earth, we've got the lithium stock, we read all these bullish outlooks. Why aren't the stocks going up? Because I don't do that all the time. So we've got to try and discern when we can get into these stocks and when they're going to move. Okay, so firstly, your risk, your choice. We're going to talk a bit about that today, about cutting those losses and making money. Okay. So the first, we go to the top 10 this week. Top 10 trend intensity rankings this week are A2 Milk, AMP still up there. Car sales, which you can see there in the chart there, broke up last week, and you can see there big volumes, you can see momentum picking up, you can see it's above the average, and it's now starting to look pretty good at relative to. Had a tough week last week, but that's the ups and downs of the markets. That's always going to occur. Mineral Resources is booming. Pro Medicus, Proesis is still there. Technology One, Treasury Wine Estates, Altium, and also Chorus, and they're all doing okay. Altium's a new entry. So they're the top 10 trend intensity rating stocks for you this week. Okay, now what we're going to go to is get into the markets. Firstly, what I want to have a look at is Dow Jones. Okay, had a bit of a blip this week, but it's been very, very, very strong over the last few weeks. So we're sort of hold fire on that one. It still looks okay. Volume's been good on the buy side. Momentum's picking up, so that's no real concern at this stage. As opposed to the Nasdaq, which is still trying to form a base at the bottom there. It had a fallback again this week. I mean, technology is the way of the world. It's the future of the world. And we've had a big correction here, so there's some great opportunities at the moment. We just got to wait for this Nasdaq to bottom a bit. And some of our stocks get dragged down, unfortunately, with that who are in that technology index or our technology index. So they suffer a little bit from the Nasdaq, but you know, it's all a bit of time. We're having a good correction. We had a huge run. We saw all those big stocks go miles into the sky, and we just come back and we have a bit of correction, which is a good thing to bring us back to earth, like those beaten down stocks we saw last week. Okay, gold. It's really reacting mostly to the US dollar most of the time, so it's had a bit of a bounce. Nothing really that encouraging. Just the US dollar's fallen off its perch a little bit, but that's okay. Copper, it had a rebound, it came back, it had a rebound, it's back up again this week, so it looks okay. It's trying to turn back up again, as a lot of commodities are, but the volume case is pretty good here. The momentum's the downside momentum is easing, it's above the average, so the construction is going from the sell side to the buy side slowly there, and it just works. It works through these processes sometimes and takes a bit of time to do it. Like stocks that are bottoming, they have their fragile moments, and that's what happens. And Brent crude, well, you would think again that this should be strong because of what's happening in the world, and it's now looked like it's falling off its perch a little bit here at S1. Whoops, falling off the edge. So we fall through S1 here. We may have a further correction to go. We've seen some selling pick up the last couple of weeks. There's certainly been some pressure there. So at the moment, it's still following that downward spiral of lower lows and lower highs. So Brent crude, for me, is lower prices at this stage. Okay. All right, so that's copper. Now we go to the ASX 200, which has been looking very strong as well. And, you know, it hasn't been weakening off too much. When corrections overseas, it's been holding up, it's been bouncing a bit during the day. So it's really looking quite good. And the commodity profile is lurking there, trying to keep a bit of support in the market there. But realistically, when you look at the chart, it's broken the high that we saw back in back in August. We've bounced off this low from October, and we're still going higher. So there's no reason to think this can't move towards the highs at the moment. There's a bit of resistance up here for sure, and there will be some selling. But for the moment, I still think it's on an upward trajectory. Its little trend is now up. Okay, so that's the overseas markets. Now, what I wanted to do then was go to, I'm going to go to the stocks now and have a look at some of the stocks, because they're looking quite interesting. Now, I always cover a couple of leaders at the moment, and they're not really looking all that fantastic at the moment. So what I'm looking at today is Coles and Woolworths. They're the two consumer staples stocks at the moment, and they're not looking all that flash. They can't really seem to get off the ground. So Coles are still wallowing down the low of the trading range. It's been for a couple of years here. Can't pick up. It had a pick up here. The sellers have come back in. And if we just move this volume profile up a little bit so you can have a look here, a little bit of a closer look, we can see here the sellers are still dominating. Too many red bars here. Even the green bar here didn't really attract much buying. You know, the momentum index is flattening at best, so you know we might be at a base, but we're certainly not looking like we're recovering at the moment. And trend intensity still sits at -8 for Coles, and similarly for Woolworths. It's also been trying to rally, but not having much luck at all. And again, we can see sellers still starting to dominate here. Although we did see a little bit of a speck of buying just appear in this little rally here, which is a good sign. We keep making these new lows. There's no real follow through yet, so that leads me to think that we are probably near a low. We have come off from 43 down to 33, so a good $10 off this one. So we're probably in a value area. It just does not seem to have the confidence to go higher. And if I just scroll it down, you can see this is Woolworths. Trend intensity rating is -7. You can see the old highs up here, up around $43. So Coles and Woolworths and the consumer staples there in that leaders area are still struggling. Now, what I said to you before is we're going to have a look at some of the miners today. Some of these rare earths and lithium stocks are being pretty interesting. So let's have a look at some of the stocks in the mining sector, because it is hotting up. There are some stocks, you know, BlueScope's picking up, Mineral Resources is booming, even BHP, Rio and even Fortescue are starting to look better. You have to go to Stockradar to see what these ones. We're going to cover off a few stocks for you today so you can have a look. Firstly, we're going to start off with Wally Parsons, which took over, I think it was at Jackson Engineering in the States a while ago, and it's sort of, you know, stocks that are trying to absorb these things have a periods of weakness. People are uncertain about what it all means, so it just takes time. But Wally Parsons has always been a good stock, and if we look here, we can see that this rally since sort of early 2000 has been a steady sort of uptrend. You know, it's had its blips here and there, but we've still really seen the bounces have been supported, and again we're seeing another good bounce supported here at the moment. So we're now getting to a very interesting stage for Wally, because if we look at this old high here, this goes back a long way back to 2019. This is resistance prices. Now I know the stock has changed its shape and it's changed its spots since then, because it's taken over Jackson Engineering, a slightly different profile. But the market's now right to an area here where there's some significant resistance up here. I'll just blow this up a little bit more so you can have a look at it. We've got 1, 2, 3 spots here where the stock has had a bit of trouble here, and it's just holding up here quite well. Comes down here. We've seen some good buying through here. It's eased off here now. We've seen a bit of selling here over the last few weeks. So that selling here has pushed the price down, but not a lot. We're still well above this low here. We're in this trading range here. We're sitting just below this key level. So the sellers are certainly out there, and it's an interesting situation we're in, because the buyers are also supporting it. So we've got high lows here. We've got a steady resistance point, but this area here is such a big resistance point. It's significant. So if we do get a breakthrough here, it's going to be a new high opportunity for one of these stocks, for Wally. And I think, you know, the momentum is positive. It's above the average. So we're in that shape where trend intensity is -1. It's neutral. So it looks very interesting to me, Wally Parsons. And if it can manage to close up above, I think these 3 lows here, if it can close above there, that would be our trigger point. And we could then could well see a rally back towards $20. And even further, because this is a really quite a big reversal pattern. You can almost call it an inverse head and shoulders, or whatever you want to do. It is showing that the shift has gone from those sellers to the buyers. So this is a very interesting stock, and like a lot of these miners, they don't seem like they're just going to go imminently, but they're setting themselves up for a good rally. So Wally Parsons is one for you to keep your eye on. Now the next one is Sims Group, which is again in a totally different area, recycling of metals and things like that. totally different, but it's come down a long way, and we talked about beating up stocks last week. This has come down 45%, Sims Group. Okay, now we haven't got a lot to go on yet, but if I just go back here, okay, so we've come down 45%. We've hit this S1 area, which was old resistance here. It supported the stock quite a few times over the last couple of years, and we've now got reasonable volume starting to appear in the stock in this little rally here. Momentum is just starting to ease off a little bit. Okay, we're still below the average, so we've still got a trend intensity rating of -7. That should say -7, not +7, because it's red. So we're probably in the throes of beginning a trend reversal process. So again, it's one to watch, not the one that's going to take off right now. The buyers on weakness might be buying it around here. There's obviously some people interested in this stock. I will wait for a trend reversal, as I always do. But this is an interesting stock. Again, we can watch this one develop. Again, we're still looking at these some of these metal stocks looking okay, but are they going to rally? Well, this one's not going to rally just yet. Doesn't look like it, but it's starting to build the case already. We're at major support, and we send a bit of volume. So that's two good bits of evidence that I like to start this case. We'll start the ball rolling here. Okay, the next one I want to look at is another. Well, I've got two rare earths ones here, which you probably all want to have a look at, and this one is Aluka. I'm going to go right back here for a minute and have a long look at Aluka here, because we go right back to this area here, and you can see since about 2013 this stock has traded in this huge range here. The old highs are up at $20, so I'm going to focus in on what we've got now and have a closer look at it. Now, what we've now got is we've had a rally off the low of the trading range. We've hit the top of the trading range, and we came back pretty sharply, sort of in 2020, 22, I should say. Okay, came back really quickly, and it's bounced around here. Now we're getting possibly a little trend reversal pattern, but I'm not too worried about that at the moment. What I'm really looking at is the break of this big trading range, because that, when we talk about an opportunity for rare earths, why isn't the stock going up at the moment? Because it's not ready to. When it is ready, it will do. When it tells me it goes to R1, then we're going to get a new high opportunity, and that's when I really look for an opportunity for a good rally, because if I get volume, which I am getting at the moment on this in this short-term rally at the moment, momentum is now starting to turn positive. It's above the average, so things are starting to look a lot better. For the aggressive, you may take, this could be classified as a trend reversal pattern here, but I'm going to wait, because if I get all these highs across here, 1, 2, 3, 4 highs, I'll wait until those levels go for confirmation, because I am conservative and I am wait, because I think the big opportunity is once we get above R1. Okay, so Aluka looks very interesting. It's in rare earths, it's an opportunity, but we just have to be patient for the sign that it's actually going to start moving off. Okay, so it's certainly happening there, just not quite ready yet. So that's Aluka. Now if we go across and look at Linus, which is another different one, which we all think should be going through the roof, because it's a great rare earth stock. Well, just recently we've had a big pullback from $11 round down to about $7. So that's a bit despairing for some people who have bought this stock thinking this is going to continue on forever. Doesn't happen. Stocks always go up and down. This will always happen in the mining sector, no matter how bullish the underlying outlook for commodities are. So with Linus here, we've got the pullback here. It's come back from 9 to 7. It's now rallied back up to around nearly $8 or $9. Okay. Now there's not a lot here on the volume front at this stage. I'll just colour that a bit more for you. Okay, so you can see here, it's mixed business. There's two-way business going on here. There's sellers and buyers in the stock. Momentum is still under zero, so it's still negative. It's just starting to flirt with the moving average at the moment, so there's still a lot of work to do yet. And again, unless I get a trend reversal beforehand, I'll be waiting for this R1 level to go before I'm going to say this is the potential of a move like this. And this one took us from around about $1.30 to $10, so that's a fairly significant move. So I'm prepared to wait and be patient for the evidence to tell me that this is likely to happen. At the moment, it doesn't look like it wants to do it. It's certainly showing signs of it. There's not a lot of buying there. Momentum is still weak. So there's a lot more to go on. And this again, it's a 25% drop, and that's significant. So as traders, we've got to be careful, because we can't really wear those sorts of things. A long-term investor might do that, but we've got to make sure we know what our profile is. And I'm a trader, I'm a momentum trader, and that's what I look for. So I don't want to take stops. I don't want to be sitting through markets that are falling 25% or more, because that's not what I do. So I will just wait for Linus, and it will tell me trend intensity rating is picked up to -5, which is a bit better, but there's a lot more work to do there before we get that new high opportunity. So no overwhelming evidence. Linus is about to take off now, despite what you might read in the newspapers. Okay, now another one we've got here, which I think I probably might have shown you a couple of times, and again I'm going to show this long-term profile here, and this is why they're so significant, and perhaps why stocks aren't moving off, because we've got this is Intertek pivot. Now we're up around 430 up around the highs here, and the lows are around about 180. Okay, so we've been trading in this range for a while, since 2009. So really the opportunity is when we start to see this break, then that's when all these people who are selling are going to withdraw and turn into buyers. Okay, so let's have a little focus on what we can see now for the moment. So trend intensity rating is 0, good sign. Okay, now we have had a fairly big pickup. I'm not too worried about anchor bias, about where stocks come from as far as price goes. You say, well, it's gone up a long way, it can go up a lot further. That's what the stock market does. It exceeds expectations all the time. So I'm not too concerned about that, but you can see all these high lows, higher highs and higher lows pushing this up here. Now we've got this resistance here. We were taken out here a while ago in a trade, so we're neutral on this stock at the moment. Trend intensity rating is 0, but we can see here, I'm just going to blow this up a little bit more so we have a good look. We can see there's 3 peaks here at the moment, which is where the resistance is. We can see some good business here. Some buyers are starting to come back into this stock. Let me just colour it a bit more. Okay, so you can see here now the profile's getting bigger. There was some selling off here. We can see the green bars starting to appear here. We saw a big red bar here, which is when it got to the highs and came back. So it's still in battleground territory. There's by no means a surety, this one, okay? But we are in an uptrend, which is a good sign. We've got high lows here, and we've just got a bit of a resistance here, which is understandable because we know we've got 10, 15 years, 10, 12 years of resistance at this level here. But if it breaks, that's a significant change in the profile of Intertek pivot. So that's a simple new high opportunity. Buyers are coming back, momentum is better, it's above the average, so there is a trend in place. We just need to take this out here, and then we'll probably see a good rally, or the odds are that a good rally will follow from that. So there's a few miners for you to have a look at. There's lots more that I cover in Stockradar, and lots more things hotting up in there. As I mentioned to you before, BHP is looking a lot better, so is Fortescue. Mineral resources is booming. BlueScope Steel's coming off a low. So there's some interesting stocks in there worth watching. And the gold stocks, I'm really not interested in the gold stocks at the moment. They're not doing it for me, apart from Proesis, which is going on quite nicely. Okay, so they're the stocks I've got for you today. Just a couple more quickly. We'll just go through Dominos, which is the one we've been following for a bit. And it's an interesting stock, this one. We're starting to get a little bit of bullish news come out about this stock. So it is looking interesting. And again, we can now see there's heavy buying here, really heavy buying here, holding this stock up. So this is a good sign. Momentum is still weak, or it's better every day, but it's still below 0. And we're now starting to flirt with the average. So things are changing. Trend intensity is still -8, maybe -7, I think almost now, but still, it's trying to carve out a bottom for long-term support. So still looking like the case is good. We just need a bit more of a constructive trend reversal pattern to give us that level where we can say, okay, this goes above here. That's when we can start buying it. Okay, so that's Dominos. One other little stock I'm just going to show you. I couldn't really find anything at the lower end this week that really took my fancy. So I'm going to show you one that I'll cover anyway. And if I look at the health stocks at the moment, they're an interesting sector because they're starting to climb up the trend intensity rankings. They haven't got into positive territory yet, but some of the stocks are starting to look interesting. And the one I'm going to show you next is one we recently started covering, which is EBS Group. And what I do is I try and simplify things as best as I can for you, and I focus only on certain things, and I discard many things. I focus on four things: price, moving average, momentum, and volume. They're the 4 things that I care about. They're the 4 things that give me the answer. That's all I need, okay? And when I look at a stock like EBS Group, it's had a big uptrend, it's had a nice little correction, and now we had a nice little move up towards its highs. This is the old highs, significant, okay? Now, we're now above the moving average. We've got volume growing nicely here, and momentum is kicking higher. This is what I call simplicity. It's an alignment of the stars when all 4 things say yes. At the moment I have 3. because I don't yet have the new high. But once I have the new high, I have all 4 things saying this is likely to go higher. So I buy it when I get the signal. I buy it on the Monday. I set my stop, and I then let the money management kick in, and that takes over the trade for me. So that's just a simplicity, my simple analysis. Then it becomes money management, and that really works the trade for me. Okay, so that's EBS Group, one for you to watch, an interesting one indeed. Okay, so now I want to go to trading tactics. Well, I didn't cover the stock pick update for you when I went through the ASX 200. We have 3 new stocks in this week. So we're up to 34, so we're slowly starting to climb. Okay, so we've got 33 stocks of 162 stocks covered and 1 ETF of 21 covered. So go to Stockradar if you want to see what those stocks are. But it's slowly we're getting something happening there finally. The portfolio update has no change. We have 5 stocks out of 20 in the conservative portfolio. Both stocks, excuse me, Energizer portfolios 5 and 10 are both full and going along nicely. We're having a little bit of a tough week. The market's down a bit today, but that happens. But they're slowly looking better as well at the moment. Okay, so your risk, your choice. Cut those losses so we can make money. That's the name of the game. Okay, so what I'm going to talk about today is risk is a choice. It's a choice you make whether you are going to have high risk or not. Okay, so if you're going to lose, you must lose small. If you start losing big, you're in trouble. And I mentioned before about differentiating yourself between a trader and a long-term investor. A long-term investor buys and holds so everything they want to do, and that's not what I do. Okay, I'm a momentum trader, so I want to trade the upswings. I don't want to be involved in the down ones. So when I'm starting to lose, I make sure I get out before anything changes. So if you're going to lose small, and don't care about what you think or what the papers read or what the experts say. If your stop goes off, you do it. You only take big losses because you make that choice. Okay, it's a choice you make that you want to take those big losses, because you can take a small loss, and if you keep taking small losses, you will never ever take a big loss. So often we hang on when we shouldn't. Okay, really important. Why do we set stops? Why do we do it? To limit losses. Okay, so that's what we're trying to do. We're trying to keep our losses small. So why are you taking big losses? I don't know. You must not do that. Big losses are hard to come back from. I've shown you the chart many times about when you start letting your losses go from 15 to 20 to 25 to 30, the comeback is harder and harder and harder. Okay, they are a psychological noose around our neck. They weigh us all the time. We're carrying losses. We can't look forward positively because we're thinking about these losses all the time. So if you don't have them, you won't have that negative psychological state. Okay, then why is it we still have those big losses? Okay, we don't always act on our stop. We have a stop for a reason, to act on it. So when the stop is hit, we must act. It's a choice we make. If we choose not to hit that stop, then that's our choice. Then that's going to say then we're likely to take big losses. Why don't we take that stop? Why don't we act on it sometimes? Because we live in hope. We pretend it will get better. Just another week. Bruised ego. All these 4 reasons are not valid trading decision-making rules. They are all just emotions, and we know emotions are really bad for our trading. So they are all wrong choices. So you can make the right choice or you can make the wrong choice, and it's up to you. You follow your stop or not. Okay, the simple answer is, as traders, we must take the losses before they get bigger. Snip them off before they get bigger, okay? Because they inevitably will get bigger, and we can't afford that. It's like putting money in the rubbish bin if we do that. So we just know, and I've seen so many times before, and I speak to members all the time about how do I stop taking these big losses? Well, it's up to you. I can't do it for you, but that really is, you define yourself as a trader, and don't all of a sudden say, I'm a trader, no, I'm a long-term investor now, I'm going to hold for long-term, because that doesn't work, I've got to tell you. Okay? So, liberate yourself and your mind, take your loss and move on. And I've showed you the last couple of weeks how we can still take losses and we can still win, because if we get our big wins, they're the ones that make us our money. Okay? And not the little losses, they just make sure we conserve our capital, but we've always got to make sure we take those big wins. So it's a simple decision to take those losses and move on. Free yourself from the baggage of losses and trade positively, confidently and profitably and stress-free. Okay, so make the right choice, you'll thank yourself, and so will your trading account. Okay, so that's really what I wanted to say. It's a choice you make. If you want to take big losses, that's your choice. So you can't blame anyone but yourself in that situation. Okay, so that's all I wanted to talk about today. There's some great stocks in the mining sector there. Go and have a look at Stockradar. Look at the one that I've got there. Some interesting stocks coming up. We make a lot of choices when we trade, but the choices or decisions we make should be built on the processes that we follow, not those emotions about hanging on and things like that. Okay. So just as your risk and losses are a choice you make, if you choose not to take big losses, you will not take big losses. That's an important part of your risk management process. Okay. Survive or sink, it's up to you. Make your life hard or easy, it's also up to you. Okay, so I can't be forceful enough on that. So stock market trading is common sense and simple if we let it be. Okay, that's all you need to do. Just follow those rules, take your stops, move on, and life will be simple and profitable. That's how it works. So stay safe, watch your trends, heed your stops, give me a call if you want to have a chat, and I'll see you all next week. Thanks very much.